YouTube? It's Louis here. I hope you're well. We're taking a look at Quant today. And as you can see, we made a post about Quant yesterday about 9 p.m. Quant targets have finally been met, and we're now seeing that bounce off the weekly bullish cross, exactly as predicted. So here's the weekly bullish cross we were calling ever since, specifically that day where we hit $200 and something. We'll get into it in more detail, but the specific day, I remember making the video for you guys. When we hit this purple line, I said, guys, this is the moment where now we're going to head towards the weekly bullish cross. And we called this over 45% dump to the weekly bullish cross, that we need to see a weekly close above. I spoke about this in yesterday's update as well as over on my Twitter. So I do urge you guys to follow me, Louis_crypto. Make sure you're subscribed to the channel, also a follower of the Twitter. We're trying to push for 5,000 subscribers. There was over 1,000 of you watching yesterday, and over 50% of you are not subscribed. So I would really appreciate, after me doing all this work for free, which I don't have to do whatsoever, I'd appreciate if you could help bump the algorithm up, do your part in liking, of course, subscribing, and of course, commenting every single day. Please, guys. I do it for you, so please do it for me. A lot of you do it, and do it in the comments. So I'm appreciative of all the supporters of the channel. Look, 81 likes, absolutely amazing. So thank you for that support. I want to bring your attention to this as well. Real quickly, Angus, someone that's a student of mine, managed to buy that lower wick for Quant. We'll take a look. Here, yeah, he bought that lower wick, and yeah, he's learnt it from the course. It is currently 50% off for a limited time. Just head over to my Twitter, Louis_crypto, and private message me. Just before bed, I did say over on Twitter, or maybe in the Bitcoin update, guys, I urge you all to check out the Bitcoin videos. It's so important. Many are not listening, and that's why they can't caught off guard. For you, you're lucky because you're in the Quant. You're in Quant, and we've known that Quant was meant to be dumping ever since this point, all the way back down to the weekly EMA. So because Quant was up there first and it's already been dumping for 4 weeks, we knew it was coming down already, but Bitcoin only dumped yesterday, so it's out of the ordinary. But we already prepared for the move. Go check out today's Bitcoin update. I spoke about it on Twitter and in the Bitcoin update yesterday, how we could be taking out the lows. Go check that out. I'll link it here as well, underneath the video or somewhere on the screen. Yeah, sorry to say, but the big wicks will get filled. We will most likely visit the lows again, and I said this at around midnight last night. So if we go to the daily time frame, the reason why I knew with confidence we were going back down to the lows after closing a beautiful daily candle at the 55. You're holding the 55 daily EMA. Unfortunately, although we had the daily close, this wick was telling such a big story. I've told you guys in the past, if you've been on the channel for over a year, you would know that back in 2021, I think it was for Bitcoin. I think, yeah. Essentially, back in 2021, I was pointing out that each big wick that was formed was eventually filled. And we could go back very far back. So we have big wicks here, you filled them in. Big wicks here, you filled them in. Big wick here, you eventually filled it in. Hit big wick here, you filled it in. It doesn't mean filling it in 100%, going exactly to the bottom, but filling in some of that wick, essentially. And over here, we filled in that wick. These wicks over here, we filled in these wicks, and it looks like we filled in these wicks, and we printed some yesterday, so we need to fill them in as well. So that's why we're seeing Bitcoin doing that. Heading back to Quant, this is essentially because I was able to tell you guys over the last year, I think it was around summer last year, about that case. Yeah, this is essentially why I could tell you guys that even though we closed above something so bullish, the 55 daily EMA, you should expect continuation upwards. Because we had such a big wick to the downside, that's specifically why we came back and revisited the lows. And I was really proud of some of my students in my Discord community, which is free once you take on the education, which again, 50% off on the course at the moment for limited time. People were asking in the community chat saying, if I were to put in some buy orders, where should I put it? And then I had another student say, put it a few dollars, maybe $5, $10 above the low. So that's really nice that people in the chat are helping each other. They don't need to rely on me. They can all rely on each other. Why? Because they have all the same information as I do. The only difference between me and my students is that I've had more days. I've had more years than them. We have the same exact teachings and info, It's just I've had more time with it, so I've noticed more things with the experience in the market. Think about it. I've been here 4 years, and compared to someone that hasn't been here for even 6 months, how many days are in 6 months compared to how many days are in 4 years? It's a big difference. So of course, someone with many years experience is going to have is going to have more experience basically from the market. So yeah, it's amazing we're holding to 200 EMA. Where did we bounce off? The level we say we can't lose whatsoever, the inverse head and shoulders neckline. This is the only way you're going to keep this $400 technical target valid. Guys, if we close below this neckline here, which is also the 200 daily EMA, not weekly, the daily time frame, the 200 daily EMA, if we close below this as well as the neckline, we are no longer going to 400. I will be the first one to tell you that. I want to see consecutive daily closes below and it flipping into resistance. There's a good few steps. First step, fall below, if it is going to do so. Second step is actually coming back into it and retesting it as resistance to continue lower, because you could just reclaim it and that would be a little bear trap and we continue. So really, if you obviously do check out the Bitcoin videos. I've been saying that's all to do with the weekly close. So again, make sure you're checking the Bitcoin videos daily, as well as keeping up to date with the Quant videos daily. If we were to get this scenario, now it's not the scenario where that should happen according to TA. This is completely TA. This is not my emotions. I was able to call this because this was a key resistance and we need to retest a key support, which we had never done since breaking out of the inverse head and shoulders. So we ran into a resistance of last year, which we had on the we had this line for over a year on the channel. And we dumped towards the bullish cross on the weekly time frame, back to the inverse head and shoulders neckline. This must hold. This must hold. One of these lines will give either the lower line or this upper line. You're trapped between these two. It's quite hard to see everything with all these boxes, but we do actually need them. I can get rid of this one at least for you guys. Maybe, yeah, I'll do that, but it's already getting a bit confusing. Either way, from the low to the high, we have our golden pocket, which is just what I got rid of. You shouldn't be losing that. So you should actually get pulled towards this like a magnet, which we've done so. The reasonings, the 200 weekly daily EMAs here, the bullish cross on the weekly, which needed to be retested to confirm this weekly uptrend. It needed to be retested and confirmed as support. We have 4 days and 10 hours to close above 100. Let's get this exactly, $122. If we're closing a weekly candle below this and failing to reclaim this level on the weekly time frame, so a weekly candle below, 1 week will go by. If the next week we're rejecting this, we've got wicks going through to the upside and we're closing under, essentially like this. You've got wicks to the upside, but you're closing the body well under the purple line. You've got wicks to the upside, but the body is closing under the purple line. So if we saw that over here where we fall under and we come back up into it and we have wicks to the top with the bodies closing under this on the weekly time frame, that is a signal you're heading back to the $83 low. Again, this was the level which I was able to give you I was essentially saying back here, now we've reclaimed this level. We've gone up a level. This is your ground floor. This is your first floor. And we're essentially in the second floor right now. We need to hold the first floor ceiling as a floor. Otherwise, we go back to the ceiling of the original ground floor, but the floor of the first floor. Okay, that was very confusing. My apologies. But once you get out of this, the ground floor, you use it as a floor. Then you break the resistance of or the ceiling of the first floor, and you use the first floor ceiling as a floor for the second floor. That explanation. Sorry guys, but do you understand what I'm trying to get at? Lose this, you're coming down to here. Lose this, you're coming down to here. At all costs, we cannot lose the psychological support. You can even see I've placed the fibs from here all the way up there to get this golden pocket. And again, we need to see this golden pocket held. We're seeing so many things in this location saying there is support here. We just need to see it consistently hold with the weekly close. The daily close, let's close above the neckline, but again, weekly close as well above $122. Otherwise, we get this scenario to the downside. 83 would be your next target. And if that fails to push you back above like this, if it fails to do so, and you'll continue down to the psychological support. What's interesting is that we didn't even need the fibs over here to tell us the specific targets. We're just looking at looking at it exactly like my analogy or explanation I just gave with the 3-story building. So this is your floor, this is your ceiling. Once you get above that, you hold it as support. Once you get above that ceiling, you hold it as support. Lose the support, you head to the next one below. So if we lose this key area, which we should not really, because that would essentially mean it's weekly bearish. Because if you're closing a weekly candle, if I just get rid of the drawings, if you're closing weekly candles and hitting this as resistance, look what happened last time. So that's essentially what would happen again. What I do like is how much this is dragged up the 200 weekly EMA. So the longer this takes, obviously the higher this drags. And technically, as long as you're above this, you're bullish. But if you're falling through these, it's a signal in the short term you're coming towards that. And if you're coming towards that, you're eventually going to sling the EMAs over themselves, forming another bearish cross, which could wipe out this 200 weekly EMA, something that Quant has actually never done. It's never been below the 200 weekly, and we can only say that because it's just appeared back in May. But yeah, we have to pretend that the whole way through it was following some sort. Going back to here on the daily time frame. Again, guys, there's not much more to say other than it's all about this weekly close. Do, of course, follow the Twitter. The Fibonacci's are, of course, saying that if we lose this 618, which forget 126, let's just focus on $122 because it's the 200-day EMA, it's the 55 weekly EMA, it's also the inverse head and shoulders neckline. So looking at the fibs, when you lose this, you go to the 1 fib level. That's at 86. What's interesting is we were saying if we lose 122, we're going to 83, only $3 off. Not only that, we said if $83 doesn't hold, we're heading to 50, and that's only actually $4 off the specific target if you were to lose 86. So everything's acting as confluence. Basically, the fibs is just another confirmation to which we already knew. Like we already are assuming that if we lose this, we're going to that, and if we lose this, we're going to that, and the fibs are just confirming this essentially. If we don't close below the inverse head and shoulders neckline, then of course this has been the perfect buy. We're only going to know that it was the perfect buy after the weekly close in 4 days and 9 hours, guys. So I will update you in the following days, but again, we're really just waiting for Sunday midnight. So the update on Monday will be one of the most important quant updates going forward. So thank you guys for tuning in. Over 50% of you not subscribed, so I do ask if you could help me reach 5k subscribers as soon as possible. Like, subscribe, and comment, and I'll catch you in the next one. Peace.